Welcome back to the channel. Today we're breaking down NVIDIA's latest earnings results and what they signal for the next phase of AI and GPU-driven growth. From recent EPS beats to powerful multi-year analyst forecasts, there's a lot for NVDA investors to unpack. Before we dig into the numbers, please like this video and subscribe for more institutional-grade market analysis. Let's get into NVIDIA. We begin with NVIDIA's current standing on the NASDAQ. As of the latest session, NVDA is trading at $191.27, up 0.76% on the day. The 52-week range runs from $86.22 at the low to $221.89 at the high, showing just how explosive the stock's move has been over the past year. Volume sits at over 56 million shares, underscoring the intense institutional and retail interest in this AI leader. The stock currently sits in the upper half of its yearly range, reflecting high expectations already priced in by the market. This snapshot gives us context before we move into the underlying earnings data that will determine whether NVDA can justify or even expand this premium valuation going forward. The earnings per share chart shows just how rapidly NVIDIA's profitability has ramped. In the January 2025 quarter, the company reported EPS of $0.67 against a consensus of $0.79, resulting in a modest negative surprise of 3.75%. However, as the year progressed, performance strengthened significantly. By April 2025, EPS climbed to 0.77 with a small upside surprise, and by July, the company delivered 99 cents against a 90-cent estimate. The standout is the October 2025 quarter, where NVIDIA reported EPS of 1.24 versus a 1.18 estimate, delivering a solid 5.08% positive surprise. Looking ahead into 2026, the forecast bars point to continued EPS expansion, with estimates rising well above $1 per share. The clear trend here is that NVIDIA has transitioned from early AI cycle volatility to a phase of sustained, high-magnitude earnings generation. The quarterly earnings surprise table quantifies this story in detail. For October 2025, NVIDIA delivered EPS of 1.24 versus an estimate of 1.18, resulting in a 5.08% positive surprise. The July 2025 quarter showed EPS of 0.99 versus a 90-cent estimate, translating into a 5.32% surprise. Earlier in the year, April 2025 saw a slight downside surprise of negative 3.75% as EPS came in at 0.77 versus 0.80, while January 2025 delivered a small upside surprise of 7.59%. This pattern of increasingly strong positive surprises in the back half of the year supports the notion that NVIDIA has entered a higher gear growth phase. For investors, consistent positive surprises are critical as they force analysts to revise their models upward and often catalyze fresh institutional demand for the stock. Looking ahead to 2026, the quarterly earnings forecast table outlines what analysts expect from NVIDIA's next 4 quarters. For the fiscal quarter ending January 2026, the consensus EPS forecast stands at 1.45, based on 15 analyst estimates. The high-end forecast reaches 1.48, while the low sits at 1.42, reflecting tight conviction around strong earnings power. Moving through April and July 2026, consensus EPS climbs to 1.53 and 1.66 respectively, and by October 2026, it reaches 2.07. Across all 4 quarters, the revision columns show 0 upward and 0 downward changes in the last 4 weeks, suggesting a stable consensus with no recent shocks to the outlook. This steady upward staircase of quarterly EPS expectations paints a picture of a company expected to deliver increasingly powerful profits as AI and data center demand continue to scale. The yearly earnings forecast takes that quarterly growth and extends it out over multiple fiscal years. For the fiscal year ending January 2026, 16 analysts are calling for consensus EPS of 4.44. That figure jumps dramatically to 7.03 for January 2027 and 8.66 for January 2028. The high EPS forecast runs slightly above those levels, with some analysts modeling as much as $9.56 per share by 2028, while the low forecasts remain materially above current EPS. The revision data shows a single upward revision for 2027 in the last 4 weeks and no downward revisions, signaling that, if anything, the analyst community is gradually warming up to an even more aggressive earnings ramp. For long-term investors, these numbers encapsulate the core NVDA bull thesis, a multi-year explosion in earnings power as AI, accelerated computing, and data center workloads expand across the global economy. The change in consensus chart visually tracks how earnings expectations have shifted over the last month. For both the full fiscal year ending January 2026 and the upcoming fiscal quarter, the bars for 1 month ago, 1 week ago, and current are nearly identical, with only minor upticks visible. This suggests that the big upgrades to NVIDIA's earnings estimates have already taken place in prior months, and the market is now in a consolidation phase where expectations have stabilized at very high levels. This kind of flat consensus chart, following a period of strong beats, often signals that analysts are in wait-and-see mode, confident in the growth story, but looking to the next set of results before making another round of major upward revisions. For investors, it means that the current high expectations are a known quantity, and future upside will require NVIDIA to continue delivering standout quarters that justify pushing these bars even higher. The estimate momentum text summary confirms this stability with more detail. For the fiscal quarter ending January 2026, the consensus EPS forecast has remained unchanged at 1.45 over both the past week and the past month. None of the 15 analysts raised or lowered their numbers. For the full fiscal year ending January 2026, the consensus EPS has also held steady at 4.44, again with no changes among the 16 analysts making yearly forecasts. This zero momentum environment suggests that the market has fully priced in NVIDIA's blockbuster recent performance and is now waiting for the next catalyst. While a lack of upward revisions might sound uninspiring, it also means there are no cracks yet in the bullish thesis. The next earnings report will be the key test of whether these aggressive forecasts are still too low or finally in line with reality. Finally, we look at the raw tally of the number of estimates changed to confirm how many analysts are actually moving their targets. The table shows that for the January 2026 quarter, there have been 0 downward revisions and 0 upward revisions in the last 4 weeks. For the full fiscal year ending January 2026, we also see 0 downward moves and 1 upward revision. This single upgrade against a backdrop of broad stability underscores the quiet confidence in NVIDIA's outlook. The overwhelming majority of analysts are effectively signaling that their models are already calibrated to what they believe the company can deliver in the near term, with only a small fraction seeing additional upside worth baking in right now. For investors, this tally reinforces the idea that consensus is firm but not euphoric. The fundamental story remains extremely strong, and the door is still open for positive surprises to push the narrative and the stock even higher. In conclusion, NVIDIA's latest earnings and forecasts paint the picture of a company at the center of the AI revolution, with earnings power set to grow dramatically over the next several years. Recent quarters show a clear shift from occasional volatility to consistent upside surprises, while analyst forecasts for 2026 through 2028 point to a powerful EPS ramp that few companies in the market can match. Consensus has stabilized at very high levels, but even a single quarter of outperformance could trigger another round of upward revisions. For investors, the setup is clear. NVDA is a high expectation, high reward story where execution will be everything. Thank you for joining us for this deep dive. Don't forget to like, subscribe, and hit the notification bell so you never miss an update on NVIDIA and the broader AI and semiconductor space. We'll see you in the next analysis.